Bad debts are falling and the worst of the financial crisis is behind us. These are the key messages coming out of Westpac's shockingly good first quarter trading update. Shares surged 6% on the back of a 1/3 jump in earnings. But CEO Gail Kelly says the bank still faces challenges and customers still face the prospect of a rate rise above official moves. Andrew Robertson reports.
The global financial crisis continues to be a bonanza for the big banks. Westpac says it earned $1.6 billion in the first quarter, which, if repeated in subsequent quarters, will deliver a full-year profit in excess of $6 billion.
Well, I think there was one key point, and that was the low level of impairments that emerged.
The first quarter charge was $400 million, half that of the corresponding period last year. Hugh McNally says it was a surprise but understandable.
If you roll back 12 months, the dire consequences that were projected at that time have in most part not actually occurred. But you've seen very substantial bank provisioning during this period.
Westpac has warned that the fall in provisions for bad and doubtful debts may not be as dramatic for the rest of the year, and it says maintaining earnings momentum won't be easy.
There are still uncertainties out there. Global markets not fully recovered, average cost of funding still going up, and a regulatory reform agenda still to emerge.
Lending in the quarter was up, with nearly all the growth in home mortgages. Deposits also grew as the bank offered some of the highest interest rates in the market. And on the subject of rates, Westpac has given a strong signal that it will continue to lead the way in lifting lending rates above official moves if its cost of funding rises.
Through time, sustainable business models so that you need to pass that on by and large, and we would expect to do that.
While Westpac was threatening to keep raising lending rates, the Reserve Bank was revealing why it didn't lift official rates at its first board meeting of the year. According to the minutes, members considered the policy considerations to be finely balanced, but that rate rises last year, both official and unofficial, had made a material adjustment to the stance of monetary policy, which allowed the possibility of waiting to receive some more information on how the economy was responding to the monetary policy tightening. The minutes noted the sovereign debt issues building overseas, some mixed economic news in Australia, and a fall in underlying inflation.
Inflation is always uppermost in the Reserve Bank minds. I think all the other factors are very secondary, and while there was concerns about Greece and Dubai and other parts of the world, I think it was merely the fact that inflation is basically bang on target and heading the way the Reserve Bank wants in terms of the Reserve Bank's 2 to 3% target band.
The Reserve Bank has stated repeatedly that the global financial crisis will throw up new challenges before it's finally laid to rest. Assistant Governor Guy Debelle says he's becoming increasingly concerned about the health of second-tier financial institutions in the United States.
This lower tier, which is a sizable share of the US financial sector, has loan portfolios which are very regionally concentrated with a sizable weighting to commercial property in their area. The experience of previous cycles indicates that the commercial property cycle takes a long time to unfold, and I think we may have some way yet to travel on that.
And Guy Debelle believes the global financial crisis is a misnomer. He says with Asian region economies in such good health, the GFC should be relabelled the North Atlantic Financial.
To the other major movers on our market, Wattle rose more than 4% on news. It's in talks to supply Woolworths' new hardware chain. Caltex gained 3% on a broker upgrade. Alumina fell 2.5% after the Queensland government reported an environmental breach at one of its refineries. And McMahon Holdings reported a 52% rise in half-year profit. Its shares closed flat. On currency markets, the Australian dollar is up against all the major currencies, but down against the New Zealand dollar. On commodity markets, gold has jumped to a 2-week high, and in New York, oil has made small gains.
Company directors gathered over breakfast in Sydney this morning to find out how to keep on the good side of the taxman. The Commissioner, Michael DeScenzo, told them the more open and transparent they are, the less likely they are to face an audit.
Let me say, there are some large businesses who still believe in the hide-and-seek approach to working with the tax administration.
In extreme cases, the ATO has the power to break into homes or businesses to seize documents which are being hidden or in danger of being destroyed. The Ombudsman has issued a report giving this practice a big tick.
If someone's not going to be forthcoming with the base documentation, you've asked for it, you've got legal powers, you sometimes have to use that.
It's a prospect which sent a chill up the spine of many businessmen and women.
They did say they won't bash the door down, they'll bring a locksmith, but that they can break into your home or your office without any questions or notice or anything like that, and go through all your files. So on the face of it, it's a very alarming kind of proposition.
The actual number of raids conducted by the ATO is on the decline, but accountancy firm KPMG says the major problem is that the tax office is seizing documents which it's not entitled to see. The company says this happens in raids and regular audits.
Often people are put in a position to have to deal with the ATO in very difficult circumstances, particularly with respect to access to records and documents which might be the subject of claim for legal professional privilege or protection from access by the ATO under the Accountants Concession Guidelines.
The Tax Commissioner told The Breakfast that paying tax is good medicine for businesses. He said companies judged to be at the lowest risk of avoiding tax have done the best in recent years.
In the economic downturn, the higher risk companies have actually suffered more than the other companies, disproportionately more.
And with the long-awaited Henry Review into taxation about to be released, the Commissioner is expecting it to provide a framework for significant reform.
When you talk about a topic that's called Australia's future tax system, looking at the interaction of tax and transfer systems in Australia, that has the potential of being of broad scope.
Business too has high hopes for the outcome of the review, but it can expect any changes to tax laws to be just as vigorously enforced.
And now a look at tomorrow's business diary. Industrial group Brambles releases its first half results, as will blood plasma group CSL. Coca-Cola Amatil tables its annual profit, and takeover target AXA Asia Pacific also posts its full-year numbers. Before we go, a look at what's making news in the business sections of tomorrow's newspapers. The Herald Sun looks at Foster's disappointing profit report. The Australian leads with Westpac's strong first quarter numbers, and the Australian Financial Review covers the same story. The Sydney Morning Herald examines the tax office decision to target big businesses with international operations. And that's all for tonight. As I leave you, the FTSE is trading higher by 0.52% or 26 points, and the Dow futures are up by 32 points. I'm Whitney Fitzsimmons. Thanks for watching. Good night.